All right, welcome to Trendy Options. Today is the 12th of January 2020, and today I want to talk about breakouts. So, we have false breakouts, we have breakouts. All of it is, in my opinion, it's just perspective. But what's most important is when I first started learning about a breakout trade, I simply just thought, hey, there's a bunch of candles, they're sideways, and once it gets above those candles, I want to take the trade to the upside, right? And same on the reverse of that, you have some support and you have a bunch of candles down there, and if it makes a lower low, I'm going short. And what I found out is, like most traders, I found myself getting my butt handed to me in most cases because I didn't really look up and to the left when taking a breakout to the upside, and I never looked down and to the left when taking breakdowns. And so I want to kind of give you an idea or some insight on what might help you before making that decision into whether or not you're going to consider this being a breakout or a breakdown. Okay, so here we have, in this case, we just have some trend lines. And you can see we have a channel, we have lower highs, we have lower lows, and you could easily just throw on some rails here and say, look, if price breaks above this, I'm going to go ahead and get long. If price breaks below this, I'm going to go ahead and get short. Well, as a supply and demand trader or using your edges, you can see that we want to look up and to the left and we want to see where our risk to reward is before taking the trade. So let me go ahead and on our scripts here, we're going to go over to the monthly and I'm going to go ahead and turn on, let's see here, show only last period would be no. So what this is going to do is turn on all the past edges for me. And let's go ahead and go to the Trendy Edge year, and we're going to turn on the past year as well. All right, so we're going to have a bunch of lines on here, and I apologize, but we want to do this just for this tutorial. Okay, so note, when we broke out here, I want you to look up and to the left or up above you and to the left. So let me just show you what that looks like. Follow your eyes. So price breaks here, right? I think we can all agree that price breaks here. All right. Now what you want to be doing is looking up at your most current edge, and then you want to be looking to the next edges. Okay. That is not the nicest arrow right there. So we have this one. This is number one. We look up and to the left. This is number two. And this is number three. Okay. Now, note that these edges, their job is to find us a playing field within supply when they are above us. And when they are below us, we're looking for them to find a playing field for demand. So in this case, if I were to draw the trend line, and you can see it here, okay, starting here, and we were to draw this, and I just want to highlight this so you can see this very nicely. Once we break out from here, I want to look up and to the left. You could use a stop that's underneath this rail, and let's just say, for these purposes, we're just going to say that was 274. And if I'm looking up and I see that this price here, it looks like it's probably about 286 or so. I have to ask myself, is the risk to reward worth it in this opportunity to take what I think is a breakout? So therefore, placing a stop here and looking for my next edge would be my target. Does it make sense between these two numbers? In this case, we're saying 274 and 285. I think so. $10, you're looking at putting a stop underneath here once we break out and hold this area. It looks pretty good, right? And then up and to the left here, you can see that this price probably comes in more around 297 or so. Risk to reward here looks very rewarding when we're looking at Adobe on the weekly. This is how I gauge whether or not we want to take a trade to the upside or downside on what we call breakout or breakdowns. I'm looking up and to the left on a breakout, and I'm looking down and to the left on a breakdown, and I'm trying to look at the overall risk to reward. In many cases, let's go ahead and go to a whiteboard. Let me go ahead and draw here for you, okay, what this looks like. in many cases, let's just say we have some candles here, okay, and they're doing this, and they're just right at that point, right? So you could draw a green line across here, and it surely looks like it's going to break down, right? So over here, I have some candles, and it might have looked something like this, okay? Now let's just hypothetically say that this is our supply zone, okay? And I'm going to bring it up a little bit just for these purposes. Let's say that candles have never touched there before. Okay, so this supply zone for me is fresh because they haven't touched there. I can say that if this number here at this green line, let's just say that it's 200. Okay, we're just going to say that whatever stock XYZ is at $200, and this supply zone right here, the supply is at 200.5. Okay, this is giving me 50 cents of a possible breakout, and then it could reject. So once it breaks out and everybody jumps on this break, you get something like this. Okay, so I'm always looking up and to the left. In this case, I'm looking for edges because they really are the quickest way to supply and demand, in my opinion. Without looking at formations, then this right here is not worth it. All right. What we want to be looking for is something that looks more like this. Let's go ahead and we'll draw our little, whatever's up here. Okay, something like this. And then down here, it starts moving. Okay. And it's doing its thing. And we got this line. And at this point, we're all saying to ourselves, hey, if it could just break this line, we're willing to take the trade. Let's go ahead and say that this line represents 200. Okay, and this line up here, which would represent supply, let's just say that that says 220. Okay, now we have something that has a lot more reward to the risk we're looking at. Of course, in most cases, I like to risk about $2 on a swing, 250, depending on what we're talking about here. But in this case, XYZ, we're going to say $2.50 of risk, and we're looking to drive this up into supply, which is still $20 away. The road there is not easy in most cases. Every once in a while, you take a trade and you wake up the next morning, it's up huge, but the probabilities of that are usually pretty small. What really happens is once you take the breakout, it then sucks, right back down. You get worried. You might take a stop. You might get out, and then over time, it does something like this and makes its way up there, and you're like, you go back. It's always hindsight, right? It's like, man, if I just would have kept my trade on and went with what I thought from the get-go, this would have made a lot of sense. Okay, so the road there is not easy. But this right here, what I'm trying to show you is we're looking for more of a risk to reward scenario by using the edges, by using supply and demand. You can also use Fibonacci. It could be that if I would have measured from here to here, okay, this being the bottom, that maybe, this is the 88.7, okay, and this down here was the 618. And probabilities suggest with a hold over this and a high, the probabilities are 85% that we will hit the 88.7. Okay? We don't talk about that a lot, but I used to tell all my members about the 61.8 into the 88.7. This is a real deal percentage here, okay? And you can go back and check that. Very nice, very nicely done, all right? So those are the things we want to be looking for on a breakdown, Can I find anything here that's a breakdown? Let's see here if I can find you something really quick. Okay, this is not, we didn't get a breakdown from that level. You could say here, right in here. But that was a gap down. Let me see if I can find you something. Man, the market's so bullish. I mean, it's so hard to find something that actually has, pulled once upon a time. I mean, here's Ulta, right? So, by the way, this is looking pretty good. I might have to pick this up and mark this on our swing trades for this week. Wow, it's looking pretty good. All right, so here, you could look at this the same exact way. All right, we have this resistance here, or support, sorry, and we haven't quite broke down yet. But if we were to break down there, I want to be looking down and to the left. Well, what do you guys notice? If I were to look down and left, I'm going to run into this little gap fill here. Okay, so I could put a line here, okay, down and to the left. My next one is actually lined up with this monthly and this yearly. Okay, so really at the end of the day, if we were to break down at that point, you can see we actually flushed right into almost a gap fill here. It just wasn't worth it. This is Ulta is trading at, 3-digit 267 here. That moved down into here. All right. It came quick and it was furious and straight up from there. All right. So you want to look down and to the left, and at that point, did it make sense to go short when price could have bounced at the edge or the gap fill? The bigger trade would be a close underneath this line, giving you 220.56 into a possible 206.15 using demand. There is demand here. And also, or using your edges. I hope that this quick explanation of breakout and breakdowns helps you. If you have questions pertaining to this, please reach out to me. And remember, the word breakout is used in a dozen contexts in all technical analysis, but it also is all about perspective, right? And it refers to a significant break in the trend. And, is it significant, or is demand and supply lurking just around the corner? We have to know this before we take a simple technical breakout or breakdown. I hope this helped. Have a nice day. We'll see you in the room.